fashion retailer H&M will close more stores after suffering its biggest decline in quarterly sales in 10 years. The world's second-largest clothing group's fourth-quarter sales excluding VAT slipped 4% year-on-year or 2% in local currencies to £5.1 million as footfall decreased and shoppers went online. It was also the first time, since at least 1998, that quarterly local currency sales shrank, an H&M spokeswoman said. As a result, shares plummeted 15% in morning trading to their lowest level since 2009, taking its year-to-date fall to one-third. However, trading volumes at the Swedish retailer, which also owns CO's Weekday and Other Stories, soared, up at 2.5 times the 30-day daily average. In a bid to halt declining sales, H&M said that it would speed up efforts to adjust to changes in the market, including closing more stores and opening fewer new ones, and it would start selling its core budget brand through Chinese online platform Tmall. The quarter was weak for the H&M brand's physical stores, which were negatively affected by a continued challenging market situation with reduced footfall to stores due to the ongoing shift in the industry, the company said in a statement. In addition, there have been imbalances in parts of the H&M brand's assortment composition, it added, indicating issues with its clothing ranges. H&M has seen inventories pile up over the past 2 years. Problems with product ranges also appear to have compounded longer-standing issues over the move online. It looks like H&M's product offer has been very suboptimal this season for what is now a more globally diversified company, and this will need to be addressed for investors to regain faith in H&M longer term, RBC analyst Richard Chamberlain, who has an outperform rating on his stock, said in a note to clients. H&M reported quite possibly the worst quarterly sales performance on record, said Cedric Lecasble, an analyst at Raymond James. Cedric Rossi, an analyst at Bryan Garnier, added, H&M's supply chain lacks reactivity, which is one of the group's structural issues in front of abrupt changes in fashion. Main rival Inditex, the owner of Zara, Massimo Dutti, halt, and Bear and Bershak, has outperformed H&M and others in recent years, helped by a more flexible supply chain that allows it to adapt more quickly to demand. Inditex this week reported slower sales growth in the 3 months through October, but said that sales growth had gained pace again last month. Zara reported a 6% jump in profits in the 9 months to October 31, while sales rose 10% to £15.8 billion. H&M's full quarterly earnings report is due on January 31st, and the family-controlled and historically tight-lipped company will the following month host its first-ever capital markets day in an attempt to soothe investors. Fourth-quarter sales trends and potential further inventory build warrant caution for the full-year 2018 outlook, analysts said in a note, with a buy recommendation to the stock. The CMD on February 14 may need to focus more on protecting the base rather than a blueprint for future growth. H&M said in September it planned a net addition of 385 stores this year, which includes 90 closures. The company also said at the time it aimed to have online sales in 43 markets by year-end.